Here's the main problem with standard timeframes. By the time a reversal becomes visible on the minute chart, it's already too late to enter. The move is mostly done, your stop has to go far away, and the risk-to-reward ratio makes no sense. You either miss the move entirely or enter at the worst possible moment. On second-base charts, you see the reversal earlier, much earlier, and here's the specific tool that shows it. A simple moving average with period 500 on the 3-second or 10-second chart. No complex indicators, no patterns that take years to learn. Just one moving average and the picture becomes clear. Let me show you how this works. In this example, price is in an uptrend. It's above the MA500 and the moving average itself is pointing up. Everything looks fine. But at some point, price starts to slow down. It gradually crosses below the moving average, the MA500 first flattens out horizontally, then starts turning down. That's the first signal that the trend is ending. And all of this is happening on the 10-second chart, while on the minute chart the situation still looks completely unclear. Most traders are still buying. The best entry for a sell trade is when price is already below the moving average and pushes back up into the MA500 like hitting a wall. That's a pullback to the moving average before the move continues down. Stop loss goes tight, take profit goes far. Exactly the kind of risk to reward you want. And then price continues moving down. One of the biggest advantages of second-base charts is that you can move your trade to break even almost immediately. The stop was already small, and now it's at break even, which gives you complete psychological comfort. You can hold the trade as long as the MA500 on the 10-second chart is pointing down, but here's an interesting point. If the 10-second chart moving average is starting to turn back up, but on the minute charts a clear downtrend has already formed, you can keep the trade running. The second-base chart gave you the entry, the minute chart confirms the direction. Now you're looking at a longer-term position with a risk-to-reward ratio of 1 to 10 or more. That's how the combination of second-base charts and minute charts works. The 3-second and 10-second charts give you the entry before anyone else sees it. Minute charts give you the context and understanding of how far price can go. Now let's look at what happened next. Another reversal forming on the 10-second chart. We were in sells, now we're getting ready to close the trade or even open a buy. Price moves above the moving average and holds there. The MA500 starts turning as well. First it goes flat, then it points up. And notice how price reacts to this moving average. It represents the average sentiment of all market participants. When price dips back down into the moving average from above, we can open a buy and place the stop below the recent low. Price makes a false break of the local lows, our stop doesn't get hit, and price heads up exactly as we expected. Then price touches the now clearly rising moving average one more time and accelerates further up. Total result, 400 pips on the sell side and another 400 pips on the buy side in one trading session. Trading 0.1 lot, that's $800 profit. Obviously, you need to build some experience with second-base charts first, but once you do, they outperform every single strategy I've ever come across. It's not a coincidence that second-base charts are missing from the most widely used platforms MT4 and MT5. Someone doesn't want traders to start making money. My entire trading is built on second-base chart signals. Almost every day there are clean setups, and I take them using exactly this approach, and you can watch the results in my Telegram channel in real time. No predictions, no theory, live trades, real numbers. In the first 2 weeks of May alone, the account showed 2,700 pips profit. That's $2,700 trading 0.1 lot. And before that, over 5 weeks, one of my accounts grew by 600%. That was an experimental account to test how consistent my trading actually is. The report shows the account grew 600% with a maximum drawdown of just 25%. Worth mentioning, this was an experimental account with risk deliberately set at least 10 times higher than normal. If you don't want to trade on your own, all my trades are copied to your account fully automatically. You just connect the robot to your MT5 and everything runs without your involvement. I open a trade, the same trade appears on your account instantly. Links to the second-base charts tool for MT5 and instructions on how to connect trade copying are in the description below.